Everyone, welcome to my channel. This is Easy Accounting channel. Today we are studying IFRS 16. Leases. Lease identification. A contract is or contains a lease if it conveys the right to control the use of an asset for a period of time. Control is conveyed where the customer has the right to use that asset and to obtain economically benefit from that asset. So an asset is typically identified by specific contracts, but an asset can also be identified by time. However, a supplier has a substantial right of substitute throughout the period of the use of that asset. Let's talk about recognition exemption. Instead of applying the recognition requirement of IFRS 16 described below, a lease may elect to account for lease payment as an expense on a straight line basis. So there are two bases of this exemption. Number one, the lease with a term of 12 months or less, and the lease where the underlying asset has a low value. So let's separate components of a contract. For a contract that contains a lease component, an additional lease, and non-lease component, such as the lease of an asset, maintenance, consideration payable on the basis of the relative stand-alone prices. So the lease term, the non-cancelable period for which a lease has the right to use an underlying asset, plus period covered by an extension option if exercise of that option by the lessee, and period covered by termination option if the lessee is reasonably certain not to exercise that option. Lessee increment borrowing rates. So the rate of interest that a lessee will have to pay to borrow an asset with a similar security, the fund necessary to obtain an asset is similar to the right use of that asset. Then let's talk about the accounting by the lessee. Upon commencement of that lessee, recognize the right use of that asset, and a lease liability is done. So the right use of the asset is initially measured at the amount of the lease liability plus an initial direct cost incurred by the lessee. So after the commencement of the lease, a lessee shall now measure it at the right use value of the asset using a cost model. Measurements. How do we measure the lease? Under the cost model, a right use of lease is measured at cost less accumulated depreciation and impairments. So the lease liability is initially measured at the present value of the lease payment payable over the term of the lease and is discounted at the rates of the lease. So we can use variable lease payment that depend on the index of the rates in the initial measurement of the lease. We can also remeasure this lease. The lease liability is subsequently remeasured to reflect changes in the term of the lease, the assessment of the purchase option, and the amount expected to be payable under residual value guarantee, and also the future lease payment resulting from a change in an index. Yes. Let's talk about the lessor accounting. So the lessor shall classify each lease as an operating lease or a finance lease. So a lease is classified as a finance lease if it transfers all the risk, all the reward, the economical value to the lessor. Otherwise, it is classified as operating lease. So example of that situation is the lessee transfer ownership of the asset to the lessee by the end of the term of the contract, or the lessee has the option to purchase that asset at a price which is expected to be sufficiently lower than the fair value of the asset. And the lease term is for the major part of the economic value life of the assets. And also the inception of the lease, the present value of the minimum lease payment amounts to as substantially at fair value. So the lease assets are of specialized nature such that the only lease can use them without major modification. Let's talk about the lease sale back transaction. To determine whether the transfer of an asset is accounted for as an asset, as a sale, an entity applied the requirement of IFRS 15. So if an asset transfer satisfies this IFRS 15 requirement to be accounted for as sale, the seller measured the right use of these assets. Accordingly, the seller only recognizes the amount of gain or loss from these assets. Disclosure. The objective of IFRS 15 is for the information to be provided in the notes that, together with the information provided in the financial position or in the financial statements of profit and loss accounts. And the effective date transaction is beginning from January 1st, 2019. However, earlier application is permitted. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel. Merry Christmas and Happy New Year to all my viewers. Bye.